We are covering these two top stocks with 100% plus gains today. Our review on MKDWELL Tech Inc, a microelectronics player focused on automotive and logistics electronics. Think smart RV systems, LiDAR sensors, and intelligent vehicle controls. Just had a breakout moment that turned heads across the market. The company's stock soared over 200% in a single day, with an insane 223 million shares traded, and it all stemmed from some strategic financial restructuring that, on the surface, looks like a cleanup and reset move. But let's unpack what's really going on and what it could mean for investors watching from the sidelines. So here's what happened. MKDWELL completed a $10 million private placement, selling 100 million ordinary shares. That's a huge chunk of equity for a company its size. But that's not all. They also announced a debt conversion, turning liabilities owed to key stakeholders into equity. Basically, they reduced the weight on their balance sheet while simultaneously boosting their equity base. It's a classic deleveraging play aimed at strengthening their financial position. And it worked. The market responded fast and aggressively. This kind of move typically signals one of two things. Either the company is under pressure and needed to shore up the books quickly, or it's getting its house in order ahead of something bigger, maybe new partnerships, expansion, or positioning for contracts in the automotive tech space. MKDWELL operates in a competitive niche, offering both ODM and OEM services for high-tech vehicle systems. That's a space with real potential, especially as EVs, connected cars, and smart logistics infrastructure keep gaining momentum globally. Now, let's talk about that breakout. The stock opened with a 45% pop and then surged another 175% throughout the trading session. That kind of move usually isn't just fundamentals. It's a mix of fresh news, tight float dynamics, maybe some retail momentum, and short squeeze action all wrapped together. And while it's exciting, it's also worth approaching with a little caution. Because we're looking at massive dilution here. Issuing 100 million shares in one go significantly expands the share count, and if the company doesn't back it up with real revenue growth or operational wins, the short-term hype could turn into long-term drag. Investors who got in before the pop are sitting on huge gains, but latecomers need to consider the risks. That said, the upside scenario is compelling. If MKDWELL uses this cash and cleaned-up balance sheet to double down on innovation in smart vehicle tech, there's a real path forward. The kinds of products they're building, LiDAR sensors, intelligent logistics systems, RV automation, are all tied to sectors seeing secular growth. And if they can land big OEM contracts or scale up their ODM services, this could be more than just a one-day wonder. So here's the takeaway. MKDWELL just executed a textbook balance sheet reset, and the market loved it. But the real value will come down to what they do next, how they deploy the capital, where the product roadmap is heading, and whether this financial boost translates into meaningful growth. It's a story to watch, but for now, proceed with cautious optimism. This was a big day, but the next few months will reveal whether this rally has legs or if it was just a quick adrenaline spike. Our review on BJDX. Bluejay Diagnostics Incorporated, a company working on innovative diagnostic solutions with its Symphony system, had a whirlwind of a day in the stock market. For those not yet familiar, Bluejay is tackling a critical problem in medical diagnostics with its Symphony IL-6 test, a rapid test designed to triage sepsis in just 20 minutes. This could make a huge difference in emergency care, where time-sensitive decisions can make all the difference in outcomes for patients. However, the story today wasn't about breakthrough science or regulatory approvals. It was about a major financial move and the market's reaction to it, which has some important lessons for investors, particularly those in the speculative biotech and diagnostic space. Let's break it down. Earlier today, Bluejay stock jumped an incredible 112% from pre-market to regular trading hours. That's a massive move for a company at this stage. The spike likely came from traders reacting to the company's potential, possibly fueled by optimism around their Symphony platform and the growing focus on sepsis detection in critical care. There was certainly a lot of excitement in the air, as 59 million shares traded hands during regular hours. That's an enormous volume and speaks to the speculative fervor behind this stock. But the excitement didn't last. After the trading day ended, Bluejay dropped a press release announcing a warrant inducement deal, and the stock quickly fell 49% in after-hours trading. So, what happened? The deal in question involved institutional investors exercising existing warrants to purchase 1,085,106 shares of Bluejay common stock at $3.42 per share, raising approximately $3.7 million in gross proceeds. In return for this, the investors received new warrants, which can also be exercised at the same price of $3.42 per share, but these new warrants will last for 5 years. So, Bluejay essentially got some immediate cash in exchange for handing out even more potential dilution in the future. At first glance, this might seem like a good move, a quick cash infusion for a company that needs funding to continue development and eventually bring its products to market. However, the market clearly didn't see it that way. The 49% after-hours drop is a strong signal of investor concern, because the dilution risk is now even higher. Yes, the company raises some cash, but those new warrants create future potential for more shares to flood the market. If Bluejay's stock price climbs, those warrants are likely to be exercised, and that means even more shares are issued. When that happens, the value of existing shares could be diluted, pushing the stock price back down. This move was made even more significant because it was announced after the huge rally. The stock had already risen sharply during regular trading, and investors were likely hoping for good news or a game-changing development. Instead, what they got was a financial move that, while necessary for the company's growth, comes with strings attached, dilution, and the overhang of new warrants that could weigh on the stock for years to come. So, where does this leave us? On the one hand, Bluejay is still in the early stages of its journey. The Symphony system could revolutionize sepsis detection and play a key role in critical care markets. The technology is promising, and the addressable market is large. But on the other hand, this financial maneuver introduces a layer of risk. The company is still in a phase where it needs external capital to fund its R&D and commercialization efforts, which is why it struck this deal. But it also means the stock is likely to remain volatile, especially with more dilution risk hanging over it. For investors, this is a cautionary tale. While the jump in stock price earlier today looked like a great win, the after-hours drop is a reminder of the importance of understanding the underlying financial structures behind the stock movements. Warrants and equity offerings like this can often give a short-term boost to a company's cash flow but create long-term headwinds for stock performance. If you're watching Bluejay, keep it on your radar, but don't chase the momentum. There's a real opportunity here, but the stock is likely to experience more bumps in the road as it navigates funding needs, clinical milestones, and the risk of dilution. It's a high-risk, high-reward play, and today's price action shows just how volatile this stock can be. Be cautious, stay informed, and consider the full picture. Bluejay's future may well depend on more than just the next press release or stock spike.